So if you really think about the numbers, you're working with 10% of the account and you're trying to make 8% on the account, which is 80% of the overall balance. So if I have $10,000 and my target is $8,000, that means I need to almost double the account in order to pass phase one of the account. Hey guys, in today's video, I just want to discuss trading personal capital versus funded capital. Now, I know a lot of you are super interested in pursuing funded capital. I just wanted to bring to your attention a couple things in this video, okay? So number one, I'm not biased towards one or the other. Both are great ways to make money, especially if you have a system that you've learned and you've proven some profitability on. And there are definitely pros and cons to each of them. So our industry as a whole, the Forex community, they put trading funded capital on a very high pedestal, and I think it's a great opportunity for traders to leverage their invested capital while trading for a company. Now, I can say firsthand with my own experience and seeing others, there's definitely a sense of accomplishment when you pass these challenges because they are difficult and they do last long, right? And you can tell that on the company's behalf, they tend to encourage traders to work under them by encouraging them through emails or having interviews with them. And there's definitely like a familiar feeling of receiving a paycheck from your employer based on your performance. It's kind of similar when you trade for a company. Typically, you just request a payout given you're profitable for the week or the month that you're trading, and you set up the payment accordingly. But a lot of traders tend to go wrong with funded capital. They don't understand how much capital they have to trade and how that measures out comparing it to personal capital risk. So it completely depends on your goals and your personality as a trader, whatever your preferred tolerance of risk per trade is, whether you're a high risk trader who likes to flip accounts or you're a low risk trader who prefers small steady growth. Both of these are going to vary. So when you trade funded capital, typically you have a buffer of 8 to 12% of that entire account before you lose the entire account, which means your deposit is completely invaluable if you breach the max daily loss, which is 8 to 10% of the account, right? So if you have a $100,000 account, you technically only have $10,000 to trade with. Typically, a $100,000 account will run you about $500 USD or $600 depending on the prop firm. So that means you're paying about $600 to get a $10,000 account to make $8,000 on that account. Typically, the targets are 8% profit, right? Or 10%, depending on the prop firm. So if you really think about the numbers, you're working with 10% of the account and you're trying to make 8% on the account, which is 80% of the overall balance. So if I have $10,000 and my target is $8,000, that means I need to almost double the account in order to pass phase one of the account. When you understand the numbers that you work with, then you can realize how much risk you're taking per week or per month to make the profit target on that account, right? So if you're someone who doesn't like flipping accounts, if you're someone who doesn't like high risk trading, then maybe the funded route isn't for you. You could make the argument that risking 0.5% per trade would be a lot less risk on the account. But if you think about it, 0.5% risk per trade on a funded account is the same as 5% risk on a personal account, right? So if you had, let's say, $1,000 in a personal account and you're risking 5% per trade, that's kind of the same as risking 0.5% per trade on a funded account because you only have 10% to work with, which means if you're risking 0.5% on a funded account, you can only be wrong 20 times in a row before that account's gone, right? The psychology of small, consistent growth on no time restraints, reinvesting weekly is a lot different than the psychology of trading challenges with higher risk and having time restraints. Again, I'm not saying one is better than the other. They're two completely different beasts. Because I've done both, I can speak on behalf of this. I personally prefer to grow an account that I reinvest in weekly, okay? A lot of my friends, they pursue the funded route and it works for them too. They get their payouts, they're happy. Sometimes they lose an account. It's not a big deal. You're gonna lose an account, right? But the psychology of the two are very, very different. For me, I find it easier to brush off losses during the week because you don't know if you're gonna have a good week or not when I'm reinvesting in that account each week as well from the job that I work. So, you can have a break even or a negative week and you don't even notice it because you're reinvesting money that you made into that account, right? And just doing this over time allows you to compound it. And also, as a side note, when you trade personal capital, there's no time restraints. You're free to trade when you want, however you want, and creating a cushion as you reinvest is also nice. Now, the psychology of trading challenges is a little bit different because you do have a time restraint, and like I said, you have 10% of that account to work with. So depending on how you're doing based on how far you've come in that challenge, you want to adjust your risk accordingly depending on how much drawdown or profit you're in. So in my eye, I view the challenges as a higher risk trading model depending on how much you risk per trade, right? It's difficult to pass a challenge when you're risking less than 0.5% per trade, but it's also easy to blow a challenge when you're risking more than 1.5% per trade. So to anybody new out there who's looking to pursue one or the other, I would definitely recommend you should grow personal capital successfully just to gain the confidence to trade funded, right? Find what you trade best and what conditions you trade it best in. This is all things that you can collect data through trading a small live account or even just growing demo first. The goal is to potentially use profits that you gain from your personal to buy a funded account. And provided you have some success on that funded account, the end goal should be to get a payout from that funded account and put it into your personal account. That'll allow you to have something that you can trade throughout the week, even if it's gained from funded capital, because you can do whatever you want with it whenever you want, right? So it all goes back to why people start trading in the first place. Majority of people are tired of working a 9 to 5 and reporting to someone and having them determine when their paychecks get cut. It's kind of similar when you trade funded. You're on a time restraint to trade and you have to request a payout, and you don't get that payout until it goes through on their end, right? So there's a lot more freedom to trading a personal account, but I'm not going to sit here and tell you that funded capital is not a good opportunity, because it's a great opportunity. I've seen a lot of traders make lots of money trading funded capital, and it's possible for you too. You just have to trade properly and adjust your risk accordingly to fit the model that the company you're trading has put forth. This was a quick video. I just wanted to touch on this a little bit. I had some questions on Instagram from a couple people. I wanted to cover a couple things and really open your eyes to how the funded capital is a bit different than personal capital, in that you have like a fixed amount that you're trading, right? With that being said, thank you for making it to the end of the video. I really appreciate that, guys. Channel's still small, channel's still growing. I would really appreciate if you like, comment, and subscribe. It would help me out a lot. If any of you are looking for free resources, I do have a free ebook. It's just a PDF available to the public. It's in the link tree and description. You just click it, enter your email address, and then you can download it for free. If any of you are looking for a community, I do have my free Telegram as well, open to the public. Feel free to join. It's in the link below as well. You can talk to me personally or anybody on my team through there. And if any of you are looking to take advantage of our signal group in the CPA signal group, we do have that as well. We have good weeks, we have bad weeks. There's full transparency if you guys are interested in seeing how we trade. If any of you are looking to learn how we trade, there's also the CPA Discord. That's the private mentorship community. We do have an extensive amount of videos in there, 25 plus videos on the course, teaching everything that we know. I summarize the courses I've taken personally, and I go through each one individually, and I take the most important parts and pack it all together for you guys so that it's easy to digest. So if you're looking to learn a bit about supply and demand, smart money concepts, algorithmic theory, that's the place to go. Thanks for watching till the end, guys. I really appreciate it. Happy trading.